Ever since you've come into office, things are really looking up. You know, gas is up, rent is up, food is up, everything.
Most economic analysts believe that it will have a temporary or transitory impact.
The faster than expected increase in some of those prices is actually a good sign.
The overwhelming consensus is going to pop up a little bit and then go back down. No one's talking about this great,
This is something that will settle down.
Transitory.
And the data shows that most of the price increases we've seen were expected and are expected to be temporary. There's nobody suggesting there's unchecked inflation on the way. It's highly unlikely that it's going to be long-term inflation that's going to get out of hand. I don't know anybody who's worried about inflation.
Over the last couple of months, we actually saw it trended downward.
President Biden's chief of staff, Ron Klain, enthusiastically retweeted an economist who had said in part most of the economic problems we're facing, inflation, supply chains, etc., are high-class problems.
And now for something completely different.
Welcome to Market Makers, everybody. Your home for tomorrow's TA today. Often imitated, never replicated. The markets are setting up for a very juicy retracement. In this video, a special transmission, you're going to get a deep dive Fibonacci analysis on the American equities, the European equity, the DAX, the indice, as well as Bitcoin, guys. That's going to be our key focus in this video. It's a light trading week, light volume. Markets are closed tomorrow, but the PCE comes out tomorrow. But we already know what the number is going to be because Fed Chair Powell let it slip. Well, they say he let it slip. I think it was intentional at his press conference. Spot 3. So we're going to have warmer than expected inflation, warmer than expected from last month, an increase in inflation, back-to-back months now of hotter inflation. Actually, this will be the fourth hotter inflation report, but I think Powell did that intentionally to allow the markets to price it in. And if you look at the price action, it makes sense because the markets are expecting it. But guys, there's key levels in the market we are about to hit or have hit, and we're setting up for these retracements, looking for that 8 to 10% retracement. Before we get into the charts, take a moment and go to X, formerly known as Twitter. Give us a follow there, guys, because we're having a lot of problems, as the long-term subs know, as the Discord knows, with YouTube. YouTube recently removed one of my videos. They took down 2 thumbnails off of one of my videos, or 2 of our videos. So we're going to start posting on X as the main platform to reply to everybody, but you'll still get your YouTube videos here. We're going to post them simultaneously, but I'm going to interact. I really haven't been active on X. I'm going to interact with people vis-a-vis X because I want to be able to talk about what I want to talk about with you guys, economics, politics, how it affects economics, lots of different things. And YouTube isn't letting me. It doesn't like my language. It doesn't like Lee's haircut, whatever the situation is. So give us a follow on X. It's in the video description. I'll pin it in the comments as well. A couple of things we need to talk about before we jump into the charts. Have you guys seen the 3-month 10-year yield? Lee, throw this up. So looking at the spread on the 3-month 10-year, this is from the New York Fed, guys. This isn't like my homemade chart, okay? This is where we are, and you can see the gray lines are recessions. Now look, this is updated according to New York Fed as of March 4th. So this has the 3-month 10-year inversion at 1.30. Right now, looking at TradingView, it's 1.25. But this is the deepest inversion in the 3-month 10-year yield, which is the recession indicator as described and discovered by Cam Harvey, okay? So this is the deepest inversion outside of the early 1980s, which gave you 2 massive recessions. This is the deepest inversion going back to 1959. So you need to understand the recession is incoming. It's all but guaranteed. Actually, Lee, next iteration, go to the next slide. This is the probability of a U.S. recession as forecasted by the New York Fed. Right now, it's at 61.5%. Probability of recession. So look at all the gray lines. There's your recessions. This is the highest probability outside of the early 1980s, going back once again to 1959, the highest probability of a recession. Now, you're not going to hear this from the Fed. You won't hear this from Bloomberg. You won't hear this from the Ponzi money managers that come on Bloomberg and CNBC and tell you, oh, this is what you got to buy. This is what you got to buy. Why you guys need to know this information and why I beat it into you is the market has never put in a low prior to a recession, not once in market history. And what you need to understand is this is a cycle where we're going to look for this retracement of 8 to 10%. I've been forecasting this since the last quarter of last year, looking for this retracement, and then we can get that blow off top if we don't have a black swan, if something doesn't crater in the marketplace. But we're going to go over these levels vis-a-vis Fibonacci in the charts today. So this is going to be a very fun video. Guys, there's a lot of things you need to understand when trading. Watching videos like this, educating yourself can help you find financial freedom. Consider joining our Discord. Our two sponsors, SimpleFX and BingX, will pay for your first month. That information is in the video description. I'll pin it in the YouTube comments as well. Without further ado, Lee, let's start the show. All right, guys, as always, this transmission is brought to you by our two fantastic sponsors, SimpleFX and BingX. You can trade all the equities there. You can trade the cryptos there. With our links, get our exclusive bonuses and get your first month paid for our Discord. That's in the video description. I'll pin it in the YouTube comments. Give us a follow on X. It will be my primary platform to reply and interact with you guys moving forward, okay? So let's go ahead and start off on the E-mini for the S&P. We're at 53.13 as we record this transmission. So let's talk about what Fibonacci is very briefly. We went over this. Oh, by the way, I forgot to mention this in the monologue. A lot of requests for an update on the eclipse crash cycle. That video, since next week is a heavier volume, more eyeballs on YouTube, I'm releasing that video on Monday. Watch that video. We're going to go over the historical eclipse cycles with the major crashes in the marketplace. I think a lot of you will really enjoy this, especially if you have any interest or curiosity about cycles. We're going to do all these charts starting off on a 5-day chart. Okay, so here's the E-mini S&P. Couple of things. Let's understand a basic shape in the marketplace. You guys hear me say this all the time. W's and M's, focusing on W's today, okay? This price movement, where do you see that? You have it here in a very large fashion. Here's your large W. Do you see that? And then you have a smaller W, not as clear on a 5-day chart, but this is your smaller W here for this move, okay? So we're going to look at this a couple of different ways vis-a-vis Fibonacci. That's like my buzzword today, or buzz phrase, vis-a-vis. Let's go to the previous all-time high. We're going to look at targets and where this will land on the retracement, okay? Previous all-time high down to your market low. Now, when you're looking at this, 1618, 5615, I personally think if we get our blow off top, that's where it's going to go to, okay? And we're going to look at this once again here as we examine this. So 5615, but as you can notice, you're floating between the 1272, 5163, the 1618 at 5615. Could I throw on the one spot 414? Sure, I could, but I'm looking at my primary fibs, the fibs I like to trade with as I was taught to by my mentor. So now when we're looking at this, let's try this another way. Let's see if we can find a fib that is interacting here with the current price action. If we go to this candle, I gotta put this in my memory to tell you what candle I'm doing here. The Tuesday, the 25th of July, 2023. Okay, that's the candle. We're pulling a fib retracement backwards, creating a fib projection for upside, a proportional move to the golden ratio. 53.34. You're at 53.12. Your high was 53.22. This is the key fib that I think if you can hit it, even if you don't hit it, you're so close to it, you got within $10 of it. I think this is going to provide you your key resistance level for the retracement. Okay, that's what I'm looking at for this key interaction level here on the E-mini. Now, the PCE, as I said, is coming in hotter. But if we see the market move up because it's priced in, even if it hits it and starts to decline, that's a key level to watch, as well as your current high, which is 53.22, which you still have not taken out, which, by the way, guys, you made that current high on the lunar eclipse. We're going to go over all that in the eclipse video, but you made your current market high on the lunar eclipse. Why is that significant? Because the last lunar eclipse provided your market low to the candle for this big rally back up. Pivot points in the marketplace. So we have 53.34. We're at key resistance now. Let's go back to our previous all-time high pull down to the market low. Where could we go on a retracement here? This is what you want to assume or look at here for the price action. If we look at this and we determine from our October low, we pull a fib retracement, pull it up. And again, this may not be the exact top, but it is for right now. Actually, let's get rid of this previous fib. There, you can see this better. Pull this up to the current high. So your October low to your current high. Now, couple of key things to understand. I'm looking for an 8 to 10% retracement. We've been over this many times with the fractal pattern because that's the average retracement that you get, okay? Could it be shallower? Could it be more? Yes. This is all about probabilities, not certainties. So when we look at this, let's just take it from 53.24 right here. Come down 8%, almost 9%, takes you to 48.64. Brings you to this cluster of candles here, right? Just above your previous all-time high. If you come down further to 10% or 11%, you're at the spot 5 fib. You're right here at the previous all-time high. Let's go ahead and denote that as well. You can see that. So if you come down here, so you're 8 to 10%, 8 to 11%, we'll call it 8 to 10%. 9.70% takes you right to the previous all-time high. Now, if this just collapses, right? If this is just a major sell-off because of this massive divergence in these indices, the level I really want to watch then is 45.80. We'll call it 4,600. Why? Because you're back in this cluster of candles. You're back here, previous corrective start to your October low. Okay, so those are the levels that I'm looking at for the retracement. Now, let's look at this a couple different ways. If that is the retracement, if this is the top and we start to sell off, and again, it's not just going to drop, as you guys know, this is a 5-day time frame, but you could have price action like this, right? You can get a 3-wave pattern. We went over these 3-wave patterns extensively last video, so watch that video if you didn't see it yet. But if this is the top, then let's do a couple of things. And we start to retrace. Let's take a fib retracement from our current all-time high. Let's bring it down, right? Let's bring it down to, let's say, our first level here, the 4,800 level, and just see where that gets you to. That gets you to 56.41. Do you see this up here? 56.41. Now, what was this retracement from the previous all-time high down to your market low? Look at that, 1618, 5615, 5641. So again, this is all going to depend where you retrace to. If you retrace to the previous all-time high area, harmonic expansion would take you, this is called Fibonacci confluence, to that 5600, 5650 level for your blow off top. And what would that look like? I can show you this with a bars pattern. Hold on one second. Let's go ahead and move this out here, bring this over a little bit. Let's go ahead and use a ghost pattern here if we can find one. Ghost pattern, ghost feed. We'll do this. So this would be coming down to your previous all-time high, the 4,800 level, right? 4808. Coming down, coming back up, finding resistance somewhere, doing this type of move, right? This is what we'd be looking at for the quote-unquote blow off top if it plays out this way, okay? If it retraces to that level. You look at harmonic expansion, you look at Fibonacci confluence. A couple of other interesting things we should do here as well. Let's go ahead and get rid of this fib. Let's look at market symmetry. Part of natural law trading is market geometry. To do this, another Fibonacci tool we can use is a trend-based fib extension. Let's go to the high of the fractal here, your July 2023 candle for this corrective move here in the marketplace, down to your October low, all the way up to your current high. Look at this, it's a green line. So you see your previous all-time high right here. Look at, you see the previous all-time high in green, 4805. If we go up to the current all-time high, your one fib is literally right on top of it at 4810. So if you don't believe me, let's go ahead and remove this so you can see it. This is going to line up perfectly with the current all-time all-time high. I mean, it's absolutely crazy when you look at it like this. Now I lost it. Where'd it go? Go ahead and lay it out again. All right, so let's go here. Your corrective start of your corrective high to your October low up to your current all-time high. There's your 1 fib. You see that? There's your previous all-time high, and here's that structure, 4810. So what would this look like? Like, what does that mean, right, when I'm laying this out this way? Well, let's just use an ABC pattern to illustrate this for you. So here's the beginning of your correction, previous correction, down to your low, 4122, up here to your current all-time high, and you'd be coming back down to the 1 fib right here, market symmetry, an equidistant move in the marketplace for an ABC before you would go and move up to that 4,600, 4,650 level up in this direction. This is the move I'm looking for, guys. I'm looking to trade here, and then I'm looking to long down here, wherever this may be on this retracement for that blow off top, okay? Notice this is actually, I'm always looking at shapes in the marketplace, geometric shapes and whatnot. Look at that beautiful hourglass that you have there with this move. So that's an interesting thing to note is 4810 gives you market symmetry on the correction, rally, next correction, okay? That gives you perfect market symmetry. So these are levels you want to watch. 4,800, things fall apart, watch 4,600. And right now you're at that key level, $10, $15 away from the 40 or from the 50, 53.33 level from the Fibonacci pool. So pay attention to this, guys. These are really important things in the marketplace. If we go ahead and zoom in really quickly, just look at this on the daily. You can see you're still not above your current all-time high. Going into this in the weekend, guys, with a 3-day weekend, probably going to see what happens here on Sunday or at 53.14. So knowing that $20 above us is a key 1618 on a Fibonacci pool, it's going to be a key area to watch here in the marketplace. You could see some of this start unwinding here at the end of the day as well for people that want to exit the market, not knowing how the market's going to react to these inflation numbers. But right now, the market's driven by psychology, fundamentals, value, all that bullshit doesn't matter right now. It's all psychology. So that's what we're looking at here in the market. If we look at this again on the NASDAQ, 5-day chart, just like everything else, guys, we're going to do the same exact way. So if we start off with previous all-time high, Fibonacci pool down to your market low, look at your 1272. That's your interaction fib, 18,476. This is the E-mini, 18,476. The NASDAQ's at 18,511. Your current all-time high is 18,709. You're setting up for these corrections, guys. Where is this going to go? Well, look, here's your previous all-time high, 16,767. That's one level you can get to. What's your next level? Right there at 16K. Without even pulling a fib retracement, you can get these levels by looking at the chart. So let's go ahead and do this. So when you look at this, the 618 is right there at 15.9. You have the 886 from this previous all-time high. So 16K, and right here, the 382 and the 1 fib, 16,767. These are the levels you need to watch. But what about this? Do we have any other types of confluence here? Let's go ahead and pull a fib just like we did on the S&P from the beginning of that corrective high here down to your market low. This is our fib projection like we just did. 19,510. We didn't get anywhere close to that. And we're between that 1272 at 17,580. So again, the fib that I want to use here, guys, looking at this for the W patterns, because this is what all of this is based off of, is that 1272 at 18,476. So our 1618, by the way, for our blow off top is at 20,650. So let's assume a couple of things here again. Let's go ahead and do this. Let's take our trend-based fib so we can look at the symmetrical move in the market. Start off at your corrective high, down to your October low, go up to your current high, look at the green line. It's going to line up right. I mean, perfect. You can't make this up. And this is what's so important about understanding how Fibonacci works. I spent over 20 years studying this. And this is what you need to understand about Fibonacci. It doesn't guarantee you anything, but it gives you higher probabilities for success and for trades. The 1 fib lines up perfectly with the previous all-time high again, right there at that 16 level. You see that? that? I mean, that's absolutely incredible. So that's a symmetrical move. And what do I mean by that? That means this move, this corrective move you did, and the rally up, market symmetry on a one-to-one will bring you right back down to that 16,767. A deeper retracement would bring you down to this corrective level at the 16K, we'll call it, okay? The exact same move. The exact same move you see in the S&P, even though these are different prices. So we can show you this once again here with the ABC. You'd be looking at this exact same symmetrical move before price does what? Before price, if we don't have a black swan, if the economy doesn't absolutely crater, comes back up and does this move. Once we get this move, and that's your blow off top right there. I don't know why I didn't draw it. Let's try that again. I think you guys get the point though. Come here, draw. There's your one. Here's your move up. There we go. I don't know. It doesn't want to draw that last leg, but you guys see what I'm doing there. So that's what we're looking at, right? So can we express this as well? Can we check this? Can we verify this with other Fibonacci confluence with equidistant moves? We see the fibs playing a key part here. Let's take a fib retracement from this all-time high, right? The current all-time high, 18,709. Pull it down, knowing that we think this is the target here, the previous all-time high. Pull it down to that level, right on the button. Look at your 1618, 19.9. Where's your 2 fib? Lined up literally almost to the dollar on top of that 1618, 20,650. So what's my 2 targets for a blow off top on the NASDAQ? 19,913, 20,650. You could split the difference almost and call it 20K. That would be to blow off top if we get our retracement down to this level and bounce back up just like this, okay? That's your kill box that will form in this area where I'll be looking to take a trade and drop this thing down with the reality of the recession coming back in. Same exact process as the S&P. I want to short up here in the NASDAQ. Actually posted a trade for the NASDAQ, and that's still in profit right now. Got in above 18.6, and we're at 18.5. We'll see what happens in the day if they run it up or if it starts falling down more. But that's my plan, guys. I want to short the NASDAQ here, take it down. This will be a great move in the marketplace. And what would that be, that retracement? Let's go ahead and measure that really quickly. If we go down to the previous all-time high, it's a 10% retracement. If you come down to that 16K level, take you to the top of that corrective move, 14% retracement. Very juicy trades. Hope I'm not going too fast for you guys so you understand this, but this is the key thing. It's the same in all the markets. Watch your W patterns, okay? We just went over this, but this is your W pattern, and you have this move. Pull your fib from the previous all-time high down to the October low. There's your 1272. That's your key resistance right now in the range. And if we get this symmetrical decline, then we're going to look for price to move back up to that next level and give us our blow off top. So that's the NASDAQ, guys. That's how it's setting up. Let's move forward. Let's look at the mini Dow. This is a chart on YM, the E-mini Dow. So looking at the E-mini Dow, guys, same exact thing. Let's go to the previous all-time high, down to the market low, and you can see, again, floating negative space, right? You can add fib levels here. I'm using my primary fibs. We're above the 1272, below the 1618. So this is kind of useless from this perspective. So you have to find where you're getting your levels hit from. What expansion, what proportional move is affecting the asset that you're trying to trade? What was the other fib pull that we did? The other fib pull that we did was from our high down to our low. So on the Dow, you're looking at this high right here, July high, the July 2023 high on the 5-day chart, guys. That's Tuesday, okay? Pull it down to your market low. Now look at your 1618. Does it make sense now? 40,298. What's your high here? 40,314. Within $15. Within $15 of a $40,000+ asset. You struck it. You're floating just beneath it. this is going to be putting in its corrective top. This is what you're doing right now, guys. This is a 5-day chart. So where is the Dow going to come down to? It's going to be the same across the markets, right? So we know our deeper level retracement. Let's go just take the tool here. If we come down to this level right here in these candles, you're looking at a almost 6.5% move. If you come down to the top of your corrective high, it's an 11% move. Typically, the Dow does not move as much as the S&P or the NASDAQ. So you want to look at these levels. So your previous all-time high is about 9%. And then this move here, about 6.5% is what I'd be looking for on the Dow. 37,804, previous all-time high range right in there at 36.5, we'll call it, okay? So that would look like this. If we take a fib retracement, now that we have these levels, I'll take this off. Let's take our fib retracement. We're going to take it from the October low up to your current high. And then look where you have the 382 right there at 37,296 and your 618 at 35,420, the 0.5 fib at 36,363. So let's go ahead and do our projection once again. If we take our projection, pull this down, this is our fib that we're pulling down, and we're going to look at this from a 382 perspective. If you only come down to this level, that's 37,313. You're looking at a 1618 up here of 42,169. And of course, if you come deeper to the 0.5 fib, then you're looking at 36,363, and your 1618 comes down to 42,756. I don't think we need the bars pattern for you guys to see this, but what does that look like? That looks like this move, okay? So you'd be coming down something like this, pulling back up, making your higher low, breaking back out, moving back up to this 42,756 or perhaps 41,390. These are the levels you want to watch. And if we do our fib pull again, our projection, let me go ahead and pull this back down, see what this lines up with in the macro sense. Looking at this here, you have your 1618, the 42,756. Lines up with your 2 fib at 43.01, as you can see. So again, you have your 1618 down here, which is where you're interacting with the price. Next level up, your fib confluence is 42,756, 43,051. That range right there, guys, that will be the harmonic expansion range on Fibonacci here on the Dow. Hope this makes sense. If not, rewatch it because this is really, really important information. These levels, again, this is about being predictive, understanding. You can make a game plan based on the likelihood, the probabilities in the marketplace of where price will move to, where it will retrace from, and where it will pump from. Okay, so let's go ahead and move forward. Let's look at the Russell because the Russell's finally breaking out this long accumulation Wyckoff pattern. I don't have to do anything that advanced here, guys. We pulled a fib retracement from the previous all-time high down to the market low. That's what we did here. And you can see 618's at 2146. You're breaking above it. If you can keep going, then you're looking at 2284 at the 786. And on this particular one, let's go ahead and throw the 707 on here, the harmonic slice, because that gives us a nice variance here between 22 to 20. We'll see what the Russell can do. This is the late bloomer. This is what everybody's been pumping in media because it's been accumulating for so long. This is the AKA catch-up trade. But 2150, 2220, your key levels in here. And the Russell will, of course, decline when the other markets start breaking down. And I do believe that's coming very, very soon. Stay tuned for that Monday transmission because we're going to go over the ECS, the Eclipse Crash Cycle, as well on that. So those are the key levels to watch here on the Russell. Let's look at BTC. BTC, couple of different things here as well, guys. You guys already know this 6.5% move between the previous all-time high from 2021 over here to your all-time high later in 2021 in November, and then a 6.5% move. Look at this, 6.69%. Boom. There's how you get your top, right? We already know how we got this move. We got this vis-a-vis this fib projection here, pulling it from the January 11th, 2024 candle on the 5-day chart down to your diamond pattern breakout low. So when you look at that, your 2 fib, 73,765 lines up with the symmetrical move. And guess what? That's still your high. that's still your high. BTC could easily be topping here, getting ready to move down with the retracement. So if it tops here, doesn't take out 73,765, doesn't continue to move up, then where's it going to go? And by the way, I posted a trade here. We got a 3,000 point drop. That was a very nice little trade we did on the Discord just the other day. Let's look at this. So if we're going to look at this from a retracement perspective, I'm going to pull it from this candle here, the January 21st candle, 2024. Pull it up to your all-time high. 618, guys, right here, 52K, 786 at 46K. That would be my two targets. I do believe the 786 at 46K with this clustering of candles, is much more likely to hold versus this little bit, but you never know. So let's take some projections here. Let's go ahead and look at this from a projection standpoint. If we take our projection, current all-time high, come down to this 618. What does that give you for a BTC target? 87,256. If you come down to the 786 at 46,093, that gives you 91K. 91K. Can we do our symmetrical move here as well on BTC? Let's check this out with our trend-based fib. So trend-based fib, I'm going to take it from this January 11th candle from 2024 down to that corrective low. Oh, actually do this. The corrective low here, January 21st, 2024, up to your all-time high because we got to be able to bring it down here. And let's look at the one fib at the 618. You see that green line up top? Gives you 87K. If you come down to the 786, look at that. If you come down to the 786, your one fib is literally right on top of the 1272 at 81,320. 81,320. So 81 to 91, big range. But again, we're guessing because we don't have the exact retracement. When we have the exact retracement, we can get a proportional move. Mathematics, guys, Fibonacci. So this would call for Bitcoin to be doing this action. Let's go ahead and do this. ABC. This would be the move you would be doing here, coming down to the 786, key support, and then coming back up in this fashion for your final wave, or in this fashion at the 91K level for this final wave, okay? That's the move you would be doing here in Bitcoin after you get the retracement. Where the retracement goes will determine the proportional move to the upside. So what we have now on Bitcoin, we'll go ahead and do some TA on this as well. Let's get rid of some of this. All right, so what we have now on Bitcoin, guys, I want to zoom in just a little bit before we move over to the DAX so we can go over this a little bit more here. Because Bitcoin is topping in this range, but it's still grinding, as you can see. We'll see if we can move up more. On a 5-day chart, you're not overbought. I'm not a big indicator guy, as you guys know. These are everything indicator-wise lags. Patterns don't lag. They marry price and time, okay? So that's why they're more relevant and more important. On a 3-day, you wave down, you could wave back up. Look at this beautiful double top that you have right now on the 3-day chart. Larger patterns have more power. If you do not take out that high at 73, what is the high there? 73,843. This is a double top that will break down towards those retracement levels, okay? So that's the key area you want to watch here. And again, confluence. You want to see confluence with the markets. I believe the markets are all at their tops, very close to their tops, and you're going to begin to see this decline that we've been waiting for in this overextended rally. Remember, this is the strongest and most concentrated rally, talking about the equities and stock market history. Only one other rally was more fierce, more severe, had more velocity, which was the early 1970s, which then caused the market to decline 66%, the largest break since 1929. So this is what we're looking at with Bitcoin. Could this break out to the upside? I mean, anything's possible. Could it break out? If it did, it would be making this W pattern back to the upside, okay? I think Bitcoin is topping here as long as the markets are topping, and we're going to find out with this PCE number tomorrow if it affects the markets come Sunday night, come Monday. So we'll look at the price action, but this is my thought process here with Bitcoin, guys. Let's go ahead and move over to the DAX. DAX has just been on an absolute heater lately. Let's take the previous all-time high down to your market low, 19,057. You're at 18,768. Could we get there a few hundred more points? It's possible. Europe is anticipated to be cutting rates sooner than America. So we'll see, because there's a lot of FOMO in the DAX right now. Massive, massive move. So 19,057 is a key area I want to watch on the DAX. And if we do this a couple of different ways, we can do a fib projection just like we did on the US indices. Why? Because we're looking at this again as a large W pattern. You see this? And within that large W pattern, you have a smaller W pattern, just like on the American indices. Money moves through the markets all the same way. So let's do this a couple different ways. Do a fib projection down from that corrective start here back in July, your July high to your October low. Year 1618 here is much higher, 19,575. So not really relevant for the current price action. If we do a fib projection here from the January high, 2024 down to your low, you got above 18,641. So because we have zero pullback yet in the DAX, right? We haven't even pulled back yet. I'm watching that 19,000 level. I want to watch the 19,000 level, see if the DAX can grind up to it. If the US markets really start declining, obviously the DAX is going to pause and reverse, but 19,057 is the key level I want to watch on the DAX to see if we can reach it as American equities start to interact and engage with Fibonacci on our side of the pond. All right, guys, I hope everybody has a fantastic weekend. Monday will be that special eclipse video. Give us a follow on X and take care, everybody. Enjoy your spare free time with no stress from the markets. See you guys.